Hi guys, and welcome back to another episode of Beyond the Stock Price. On this episode, we're talking about ride-hailing company LYFT Inc. LYFT shares are actually up 21%. As of today, the company's stock rose $5.66 per share, ending the day at around $31.78 per share. And in fact, in after hours trading, the stocks have gone as high as $32.40. So on this episode, we're going to be talking about LYFT, what it is, and why it is that the company has seen such a dramatic increase in its stock price in a single day of trading. So LYFT is one of the ride-hailing companies that's listed on the Nasdaq. The other one being Uber, which is the larger of the two. Both are in what is termed the ride-hailing or the ride-sharing space. LYFT is primarily driver focused based on how the app is designed, whereas Uber seems more consumer focused. So yesterday, LYFT actually announced its quarterly earnings for the first quarter. And as you can see here, the stock has gone up from as low as $26 per share to closing today well over $31 per share. So to briefly summarize the quarterly report that the company put out, the company saw increased revenues over expectations. Revenues for Q1 were $955.7 million US dollars as opposed to the $776 million that was recorded for the quarter 1 year earlier. Additionally, losses from operations were also lower. So losses from operations for Q1 2019 came in at $1.15 billion compared to $414 billion for the most recently reported Q1 earnings. Taken on a per share basis, the net loss per share came down by an even more dramatic factor. Net losses for Q1 2019 were $48.53 per share versus a $1.31 per share loss for Q1 of 2020. Now, this is still higher than what Wall Street had predicted. Wall Street estimates were around 63 cents per share. However, the report was still taken favorably by investors, hence the stock price going up well over 20%. Delving into the finances, we can see where LYFT has also greatly improved its balance sheet. We're seeing where for Q1 2020, the total assets amounted to $5.5 billion US dollars as compared to a $3.24 billion value for Q1 of 2019, as compared to $3.24 billion as reported for Q1 of 2019. We've also seen improvements in terms of the company's cash and cash equivalents, and overall an improvement in terms of the total current assets moving significantly from $1.38 billion in Q1 of 2019 to $3.14 billion in Q1 of 2020. Year over year, total liabilities were also up, but by a lower ratio. Total liabilities for Q1 of 2019 were $2.02 billion as compared to $2.96 billion for Q1 of 2020. Looking at the statement of cash flows, you can see where the net loss reported by the company had come down significantly, almost by a factor of 4. In Q1 of 2019, the company had reported a net loss of $1.14 billion US dollars. This compares to $398 billion for Q1 of fiscal 2020, which is not a bad position to be in. However, we're seeing where the company has used a significantly larger amount of cash in terms of its operating activities. The total spent on operating activities was 206.9 million US dollars for Q1 of 2020 versus 84.8 billion dollars in. Like most other companies, LYFT has negatively been impacted by the COVID-19 pandemic, the company losing almost half of its value from its February high of $53.9 per share down to its current value of $31.78 per share. Like most other companies, LYFT is actually seeing a recovery from the lowest price it has been since the pandemic, the lowest price recorded being $16 per share, representing more than a 50% decrease from its February high. LYFT has been implementing cost-cutting measures in a bid to sort of stem the losses that the company is currently facing, but as most analysts, and we do share this perspective, as most analysts have pointed out, we do not think that the worst days are behind it, and in fact we anticipate that earnings for Q2 will see an even more significant impact from the COVID-19 pandemic. That being said, a 21% increase in the share price is a welcomed development for shareholders, and the question now is actually whether or not these improvements or this trend will actually continue well into the future. Whilst we don't think that this improvement will be maintained over the short term, we are, however, bullish on LYFT for the long term. And in fact, we think that the current pandemic might give the company an opportunity, if it is that they can figure out a way to make using their service more appealing to commuters, limited though they may be.